Thank you, Morgan. I'm so excited here. I appreciate everyone coming to listen to what I have to share. Before I get started, I would like to say, based on the information that you all just typed in as far as what you're trading, is we're going to cover options today. Just briefly, we're going to talk about weekly options, and I'm going to show you a very special pattern that I have discovered. And this pattern can be used in anything, any equity, any type of trading where you do charting. So even if you don't trade options, you will be able to utilize this information. For those of you who are not familiar with me, I'm Wendy Kirkland. I'm a full-time trader. I have administered for a number of years 4 different advisories, and I have written a number of books. And I have written on option basic trading principles. I have written long strategies, short strategies, intraday charts, and the latest one is just trading the cues, which is called the Merit Advisory Program. The pattern that we're going to cover today and that I'm going to show you can be applied to a number of these different strategies. That if you're interested in trading long and it being a longer time frame, such as monthly options, you would maybe incorporate it in the P3 system. If you're interested in day trading or shorter swing trades, you might apply it to the price surge system. And then if you're interested in focusing on just one equity, you would use the merit trade. And we're going to go into more of this as we go along. A point I'd like to make is the fact that we all come to the stock market and to option trading by different paths. You might have someone involved in your family, your father, your grandfather, and uncle, and they are the ones that have interested you and have brought you to the market. It could be your education. Maybe you have a finance background, or it could be some professional involvement. But many of us have been brought to the market by financial need, and that is how I came to it. In 2004, at the age of 57 years old, I found myself penniless with a pile of bills and no income. And yet, as things have worked out today, I'm financially independent, and in this webinar, I'm going to show you how easy it can be for you to do this too. For me, inventing a way to make money from nothing was a matter of survival. It was because of a freak accident that washed away the business my husband and I had poured every bit of our time and energy and money into for 25 years. My husband and I were carvers. We carved realistic decoy ducks and birds, and we sold these in our shop along with other high-end gifts. And literally overnight, this was all wiped out. We had a hurricane or a tropical storm in the mountains here wipe out the shop. And this was Hurricane Francis, and then 2 weeks later, Ivan came and did the same thing. And we were just devastated. Literally overnight, our income was gone, our capital investment was gone, and any hope of ever retiring was wiped out. I took up trading, and it wasn't long that I discovered the pattern I'm going to show you today. And I can credit its discovery probably with my being an artist, that I see patterns. And this pattern that I'm going to show you today, I think of really as a miracle, that I had this great sense of relief that this cloud of despair was dashed away, and that I then had a source of money that I could count on, and feeling hugely blessed and grateful and excited beyond words. I wrote my first book hoping that I could help others discover the same magic and bring that into their lives. And at first it was all about empowering women. But when the guys saw how easy it was to make money with the P3 squeeze, they joined the party, and I kind of expanded my focus. And this is all a joke because the cover of the first book that I wrote was bright pink. And the guys really had to be man enough to hold a pink book. As I said, my personal goal was to achieve financial independence, and that grew to sharing and helping others to achieve the same wealth building objective of financial independence. And I did this through books that helped with long and short trading. I do weekly newsletters that give trade candidates. I supply additional education, coaching, and advisory services. The result of this has been amazing, and what I plan to show you today is how out of 129 total trades, I won 119 of them. That's a win rate of 92.25%. Now that may sound unbelievable, and I'm going to demonstrate and show you how this works. We're going to quickly cover 3 elements of this trading success. First is the leverage of options. Some of you said that you were new to options. Some of you said that you didn't trade them at all. And I want to quickly cover why or how they can add to your trading wealth. We're also going to discuss how weekly options, and a lot of people don't understand weekly options and they can be kind of scary, and we're going to cover the advantages of that. And then we're going to go into the pattern that I mentioned earlier that I have discovered because of being an artist. Now, an option can go both ways. There's 2 types. You can enter a call option, and this gives the buyer the right to require the grantor to sell the equity to them at an agreed upon price on exercise and at an agreed upon time. This is a call option is the, what you would buy if you are expecting the market to go up. A put option gives the buyer the right to require the grantor to buy the equity from them at agreed upon price on exercise at agreed upon time. And this is what you would purchase, this trading vehicle is what you would purchase if you were expecting the price of an equity to drop. Now, I want to show you an example of the leverage that I'm talking about as far as option trading. We'll take a stock that everyone knows, that Procter & Gamble, PG is the symbol. On June 26th, the stock price was $76, and on July 15th, it rose to $80. That's a $4 gain, or 5.2% gain. On the 26th, the July 77.50 strike call premium cost $1.07 per share. Option contracts are 100 shares of stock. They cover 100 shares of the stock. So that would be $107 per contract. On July 15th, the premium when you want to sell is $4 per share, or $400. That's a 274% gain in 14 days. So we're comparing now, if you had bought the stock versus the option, you're talking about a 5.2% gain versus a 274% gain. This is what becomes life-changing, and this is what really helps to be able to invest a smaller amount of money and yet receive a larger profit for your efforts. So let's look at this just a little bit deeper. The total investment, if you had bought 100 shares of stock, would have been $7,600. Or, as we bought the option, it's $107 for the one contract. For the $7,600, you earned a $400 profit. For the 100 shares of on your option contract, the stock earned $293. So for the same investment, the same $7,600 investment, you could have bought 71 option contracts and have earned $20,000 during those same 14 days. That's incredible. Now, I'm not saying that I would have suggested that anybody invest $7,600 in 71 option contracts, but this is an example of how you can take a small amount of money and earn a larger percentage per trade. So let's look. Here we have PG's stock chart, and this is the point where I was saying that we would have entered, and up here is the exit. And so what on this chart, if you'd been back here, we had a period of consolidation, and then we have the drop, and then it consolidated again. What would have told you to get in at this point, and that you would have then been able to take part in this nice rise in price? So this is what we're going to look at as we proceed. The element the second element that we listed in the three to achieve the success is weekly options. And there's a lot of people, like I mentioned, don't understand weekly options, that they're celebrating their 3rd birthday, but they're still new enough that many traders don't get the advantages. And I'd like to run through them real quickly here. I won't take a lot of time, but I'd like you to really be able to see how they can help. As traders, we have been taught not only the value of time, but also to make sure we purchase extra time so that our trades have the time to unfold and play out. And this isn't the thinking behind trading weekly options. With weekly, the aspect of time works in reverse. We're not looking for extra time to allow our trade to play out, but providing that we have the trade direction right, we are seeking protection against the market change in direction. We're using the short expiration time to our advantage. So let's look at a few more of the advantages. One, as you already saw in the example we gave, that they're very cost effective. In the example we had, I think it was $71 for 100 shares for one contract. So it is weeklies are a fraction of the cost of monthly options. They have exceptional flexibility. They're a useful trade vehicles for numerous strategies: calls, puts, spread, cover trades, etc. Long-term trades are subject to market changes. With short-term trades, you trade what the market hands out to you each day. Since weeklies are new every week, a trader can pick and choose to enter a trade at the moment that the action is happening. You don't need to tie up capital waiting for an equity that is going through a pullback or a consolidation period. You jump in right at the time that the action is happening, when things are moving. You enjoy 52 expiration periods a year. Weeklies are available on the indexes, stocks, ETFs. Exchanges offer new weeklies on companies that will attract attention each week. They change, new ones are added, and a few drop off each week. And so that there's usually new ones that have things that are happening that means that they are going to move. 1 week a month, all optionable equities become weeklies. Weeklies are a short-term chartist dream. All you have to do is ask, where will this equity be in a week or less? The shorter time frame allows for more accuracy. Weeklies can be used in conjunction with news announcements, OMC minutes. Weeklies remain more reasonably priced even during periods of high volatility. Once the news is released, weeklies suffer less of a volatility crush than monthly options. Now, Greeks is part of the pricing formula on options, and the weeklies inherently offer a greater delta than monthlies do. Weeklies don't suffer from high theta, which is the time value is less of an issue. Cheaper prices mean you can purchase more contracts for the same total investment. That was something we showed in the first example we had, that you could have bought 71 contracts for the same price that you bought 100 shares of the stock. An additional Greek benefit is the gamma is explosive with so little time value. Quick price moves before the market can change direction compounds the benefits and the leverage of option trading. And that recently the exchanges have received permission to offer weeklies for 5 consecutive weeks out in time. But you don't want to buy too far out, or you might as well purchase monthly options. So my personal goal is to help people achieve financial independence through option trading. But as I said, you can use this pattern that we're going to discuss in other types of trading where you are charting an equities price movement. Using weekly options and the advantages that I just covered, and the squeeze pattern and the strategies from the books support this goal of helping people achieve financial independence. The strategy books all reveal the steps I use to double my money in 2 days or less 41 times in an 8-month period of time trading weekly options, and most trades last 3 or 4 days. There were a few losers, 10 to be exact, in those 12 months, but when you win 92.25% of the time and you have stops in place, the winners outpace the losers. I hear from traders every day who are experiencing success with these wealth building strategies and the pattern that we're going to talk about. And this is life-changing. If you have trades where you're winning 146% in 1 day, that is awesome. 251% in 1 day trading SanDisk, or 445% in 2 days. 297% in 1 day trading CF Industries, or 296% trading Baidu. And I, like so many people, am what you would call a retail trader. I'm your everyday trader, so that you can invest $500, $600 per trade and have these types of results. Now, earlier in the list of books, I mentioned the Merit Q program, and that is the latest book that I have written about. It trades just the Qs and applies a number of patterns to that. In the last maybe 6 weeks period of time, 19 out of 20 trades have been successful and had a profit. I mean, that is just incredible, and like I said, it is life-changing for people. So we're not just talking about option leverage, we're talking about weekly option leverage. And something that I have discovered, and a principle that you can apply, is using weekly options and trading them, if you have a 2.5 to 4% equity move, it often equates to a double in the weekly option premium. So when you're looking at a chart, you're wanting to think, does this have the potential to move 2% or so, 2.5%, and I'm likely to have a double in my option premium. So then you can even back off from that and think, okay, maybe it isn't going to move 2%. Maybe it's only going to move 1%. Well, 50% gain in just a few days is terrific. That's nothing to sneeze at. So let's look at a couple more examples here. That were you to purchase midday on August 8th for 47 cents a share, or $47 per contract for the August 4th week 1750 strike call of Barrick Gold, ABX, and let's say we bought 12 contracts for a total investment of $564. Now you see that we're keeping this in the range of $500 to $600 per trade, and we sell at the end of the day on August 15th. The call contracts then were worth $2.15, or this was a $2,150 total gain of $1,586. That is 281% return. Now, ABX price when we entered the trade was $15.80. When we sold, it was $19.80. So that's a $4 change in price. That is really a hefty 25% increase in the stock's price over those 6 days, and yet the option increased 281%. So that this again demonstrates the leverage that the weekly options have, and I know I covered very quickly the advantages of weekly options, and since this is going to be archived, you'll be able to go through it and stop and really study those. But we have the option leverage and we have the weekly option leverage. So here is Barrick's price chart on August 7th, and you can see that there was a period that of consolidation. It kind of traded in a channel here. It dropped again. It traded in a channel, dropped. Here we have another channel that it's traded in. So what is going to tell us that this stock is getting ready to have an explosive move? This is the point that we're getting to. So we'll start adding some indicators here, and this is going to lead to the pattern I want to show you. So we're going to add the PPO here, and I like the PPO better than the MACD, but if you don't have the PPO on your charting service, you can use the MACD instead, but I like the way that the PPO is figured. So we've added this, and you can see that at the moment the PPO line has been in kind of a downtrend, which is what we're seeing here. The PPO line is on the underside of its signal line, and they've been very close. It tried to cross a couple times. It did a little bit there, and then it just slipped back down again. So this is demonstrating that the trend has been a downtrend. I'm seeing a question here, and somebody answered it for me. It's percentage price oscillator is what PPO stands for. Thank you. All right, we're going to add the ADX line underneath the PPO, and these are two totally different indicators. They have nothing to do with each other. Their formulas are figured in totally different ways. We've placed it under the PPO, And the ADX line shows momentum or strength or energy, however you want to look at it. When it's dropping, it means that the strength is coming out of a trend. When it rises, it means that strength is going into the trend, back out, rising again is, and it doesn't tell you what direction, it just tells you the momentum. So what I want to draw your attention to is this area right here. See how the lines have come in very close together, that they are squeezing, and that's what I call it, the P3 squeeze. And ADX is average directional index. So that here we have this area that the lines have squeezed and come in very close together. Now I want to show you what happens when that happens, that takes place. Here we have moved on to the next time period. You have, this is the area that I was talking about. The lines have squeezed in. What you're looking for then is for them to push away from each other. See how the PPO crossed up and the ADX has pushed away, and the space has grown between the lines. When you see this, look what has happened. The price is has gone up from $15 to $17. Well, let me take it one step further. This shows the rest of the climb that particular pattern went through. So you have the lines close together, and then they pushed away from each other, and the price went up. We're going to look at a number of examples of this so that you will be able to see what is taking place when this pattern happens. Here it is again. This is Amgen, and it doesn't take very long to learn how to spot these. So here you have the PPO is dropped, the ADX has come in very close, and
hey Wendy,
yes,
Wendy, real quick, if you click on that icon with the pencil that's right next to the arrow, and then choose the red dot, you can use that as a pointer to kind of show people where you're talking.
Okay.
That might help.
Did that do it? Yeah.
Yep, perfect.
Can you? All right, great. All right, so here we have the PPO has dropped down. We've had the ADX rise, so we have this squeeze right here. The lines have come very close together. Now we're going to look at some other patterns that might not be as close as this, but you'll get the point, and it will not take you very long for you to be able to spot these. And what you're looking for is for the lines to push away from each other, to spread out. And so look what happened. You had this explosive move upward. Got a couple more here. Oops, it looks like I have to click on that one more time. Sorry. All right. So this is Newmont Mining. We're looking at a 60-minute chart. We have the PPO has dropped down and come very close. The ADX has risen. The lines are very close. As they push away from each other, the price goes up. Here's Home Depot, and we're going to look at a trade from this. So you have Home Depot. Again, it's a 60-minute chart. This area right here has formed a squeeze. The ADX has risen, the PPO has dropped, and yet it only went up for a couple days and then dropped down, and then there's another one just sort of right here, and it went up again. So here now we're seeing the lines come in very close together, and this would make you think that you need to prepare for an explosive move. Now, in the books that I've written that go into depth about this. There are other indicators that you can add beneath this that are going to confirm that it is the time to jump in. And we're going to look at a couple trades that the pattern was there, but it did not work out as well as what we're going to see here. But this is a squeeze, and this is wider. This actually did not work out to go up near as high. It dropped back down, and now we have this tighter squeeze forming. And all squeezes go through 7 stages, and this is one of the things that's too much information to cover at the moment, but the stages show you not only entry, it shows you stops, it shows you second entry, it shows you when to exit, when to feel like it's safe and you don't have to pay quite as much attention. But every squeeze goes through these 7 stages. So here we have it. This is Home Depot. This is the squeeze that we were looking at earlier, and the lines pushed away from each other, and look what happened. The price zoomed up from down here around 72, 73, and went up to 77. And so if you remember, what we're looking for is that 2% to 5% move, and we know that the price is in our option is going to double. If you look at the percentage here on this day of the 28th, it went up 1.57%. So you certainly know that it went up much more than that without actually doing the numbers over that period of time from the 24th to the 28th. So here's the results. Again, I asked you to remember the 2.5 to 4% equity price move will often equate in a double in your option premium. So had you purchased midday on June 24th for 75 cents a share or $75 per contract for the July 1375 strike call, and excuse me, and let's say we bought 8 contracts for a total investment of $600. We sell at the end of the day on the 28th, that's 4 days later. The call contracts are worth $3.50 or $2,800 total gain of, I'm saying that wrong. So the 8 contracts would be a $2,800 for a gain of $2,200 or 367%. So again, this shows that the price move was well above what we were saying would double. We actually did 367% in that. So Home Depot's price when we entered was $73 and we sold it was $77.50. So that was a $4.50 change in price. That's a 6% increase in the stock's price over those 5 days, and yet the option increased 367%. So again, this is a wonderful example of not just the leverage that you have with option trading, but the leverage that you have with weekly options. All right, the pattern appears on every type of equity, and this is the Dow. This is the 60-minute for the Dow, the Indu. And here again you see this pattern, and what has then taken place is a beautiful rise in price. So when you understand this pattern and recognize it and know the stages that it goes through and are able to pick out exactly what stage it's in during any time period, you then will be able to sit and see that the market is supporting the equities within that particular index or indices. That this would work the same with the NASDAQ or the Russell, that were it to be forming a squeeze, you would know that the direction of the market you would understand the stages of the pattern and know that it's supporting the stocks, the equities that are trading within that indices, so that it can be used in a number of different ways. So when you see a chart like this, here's a squeeze that took place and went up. There you have it. It pushed away from each other, and the price went up. Then we have the price drop, and look at how close these are. And the price then, as these lines, that's what you'll be looking for, is for them to push away from each other, will then signal that this explosive move can be getting ready to take place. Now, as I mentioned, there are confirmation signals through other indicators that are added to this, so that here you have a tight squeeze, and look, it just went flat and then it dropped. Here you have another one. It went up just a little bit and then it dropped back down and went flat again. Another squeeze, it went up 2 little candles there and then has gone flat. So it takes having these other signals, confirmation signals on the other indicators, for you to be 100% sure that the squeeze here is ready to move. Here we have another squeeze, and look, this is a period of time where it consolidated and went flat for a long time. And so you want those other confirmation signals that the book goes over, that are, I say, they're as clear as a red light and a green light. They tell you really that it's time to go, it's time to enter, and they can also then be used to help you know when to exit. So that learning to pick the winning squeezes is the essence of it, and then you're incorporating the advantages of weekly trading or trading weekly options. And this is another great example. Again, you have 2 squeezes here. This one, the lines pushed away from each other and the line spread, and it went up approximately 4%. That's a $2 move from $40 to I'm sorry, $48 up to $50. And then we have another squeeze where the lines again, they've pushed apart, and this has gone up approximately 9%. This was a $4 move. So to I'm going to advance it back here so that you can see here. I'll have the chart back again. So we're looking here on August 8th, and we're going to exit here somewhere around the 14th, I think. So if we entered on August 8th, purchasing the August 13 50 strike calls with 8 days until expiration for an ask premium of 69 cents per share, or $69 for the contract, and we purchased 10 contracts for a total of $690. Again, we're keeping this in a reasonable trading range for the everyday trader, keeping the total investment somewhere around $500, $600. Here we went a little bit over. And we sell on August 13th for a bid premium of $2.58 per share, or $258 per contract, or $2,580 total for the 10 contracts. That is a profit of $1.89 per share, or $1,890 for the 10 contracts. And this then is a gain of 274% in 4 days. Again, this shows how you can make a huge percentage in just a short time period. So the key elements here for the strategy is one, that you're going to be selecting weekly options or front month options. The one we just covered a moment ago was a front month option with just a short period of time left on it. You're going to follow the strategy guidelines as to open interest and volume and this bid-ask spread, and you're going to be selecting the option with the greatest chance of producing leveraged results. And this is all information that is covered in the book. And you're only going to trade stocks or ETFs that are going to have large percentage moves. Now, you notice that all of the stocks that we covered, it wasn't Apple, it wasn't Tesla, and the expensive stocks that you expect to have large moves. The strategies show you how to find the stocks that are going to have large daily moves, and then it shows you when to enter. The pattern itself is what gives you the stop losses. When certain indicators take place, you're going to know that you need to get out, that the squeeze is not ready to unfold just yet. It needs a little more time. You exit with just a very small loss, and then you enter again when it really is ready to pop up. And again, the books cover alerts that you watch for so that you know it's getting ready, it's getting ready. Then you wait for the confirmations to know exactly when to enter. The pattern, as it says down here below, that there is actually 7 stages that every single squeeze must go through to complete. And so having this knowledge tells the entry, it tells you when there could be a second entry or when you could add to the position, when it's okay to just hold, it tells you the stop loss, and then it tells you the profit exit. All right, I'm seeing a question, and this is the information. You asked it at just the right time. The most recent book, the one that I said the last few weeks we have traded, and I have issued trades to the subscribers, that there have been 19 out of 20 winning trades using the pattern or patterns within that this book covers. This trades, the merit program trades just the cues. So you don't have to think about which stock is getting ready to pop up, which one is going to have an explosive move out of the thousands of stocks that are out there. You just trade the cues. And you apply, the book covers 8 patterns, one of which is the squeeze. There is also a short squeeze that is set up differently, but it will tell you when a stock is ready to drop, and it's going to drop substantially. And so the squeeze is my latest book. There are so many people that say, I don't have time to go through thousands of stocks and so on, and I just wanted something simple. And so that's what the merit program really is. It applies, you learn these 8 patterns, you look at the various time frame charts, and you spot the patterns quickly and easily, just in the way that I've been able to show you today. I have no doubt that every single one of you would be able to pick out a squeeze now, and they are applied to the Q charts, and that is what you trade from. Another book, and these are the titles of the book: Price Surge System, trades weekly and front month options, both calls and puts, on intraday charts using the squeeze pattern and the pattern that I just mentioned, the P3.5, which is a short pattern. This is a book, and along with the book comes a newsletter. The Price Surge newsletter comes out twice a week, on Monday and Wednesday. I go through thousands of stocks, and I list the ones that I find that are creating the pattern. So you have the understanding of the strategy, you have understanding of the pattern, and then you have the newsletter that lists stocks that are creating the pattern. I don't always find every single one, and you will learn to find some on your own, but it gives you the bait, if you want to say, to be able to trade the system using intraday charts. And these are trades that you're in maybe 3-4 days up to a week, usually tops. There's the wealth building with weeklies. Again, it uses the squeeze pattern. This has a very simple chart setup for somebody who just feels like they get bogged down with too much chart reading, too many indicators. They just want it clean and simple. Then perhaps the wealth building with weeklies would be a good choice for you. It's a book, it's a newsletter, and there's also an advisory. For those who are interested in longer term trading, I can only look at the charts after work. I don't want to be in and out of trades every week. I want something that's longer. Then the P3 system maybe is what would be a good strategy for you. Again, it's the squeeze, but it applies it to daily charts. And so you have the book, and when I say books, these are like 200-page books that go through the principles of chart reading. If you have not ever really studied chart reading, it goes through the indicators, it goes through the patterns, it goes through how to apply them, it goes through the alerts and the confirmations. There isn't anything that is left out that isn't covered. They're very comprehensive. It's not like these are physical books that you would hold in your hand, and some of them come with DVDs so that you can hear me jabbering just like I am today, talking through the patterns and saying, do you see this? Do you see that? This is what's happening, and so on. So again, the P3 has the book, the newsletter, and then for those that want extra help, there is the advisory. So we've discussed now the leverage of options, the leverage of weekly options. We've covered the pattern, and all of the books and information can be obtained either by calling this phone number. You can go to support or email support@iss.trading.com, or you can go to my website, wendykirkland.net. There's a timeline that's there. You can click on that. It shows you all the books, and each book you would click on would take you to more information about that particular book and strategy, so that you can look through it and see what fits your trading style. And today, in appreciation for you being a part of the webinar, there's a special offer for the Q Merit Program, so that if you will copy this link, copy and paste it in an address bar, it goes through the special offer that is being offered to today's attendees. This is it for me, Morgan. I don't know if we want to do a few questions and answers. I wasn't really able to keep up with the questions as they were being written down or typed in here. Go back a page. I can do that. Let's see. There you go. That's the phone numbers. And like I said, at wendykirkland.net, all of the books are there. The pink book that I mentioned at the very beginning, the first book is there. That covers basic option information and goes through general strategies and chart reading and so on. And then the next books are more, I guess you would say, strategy books. They touch upon the most basic, almost like a little review of option information, of chart reading, of indicators, and so on. But it gives you the information that really is needed for each of the strategies. And as you flip through the books, you'll be able to see which applies to you. I appreciate you being here. I appreciate the opportunity to share with you the pattern. It's my baby, and it has helped so many people that it just pleases me to no end to be able to put the information out there, and hopefully you'll make great use of it.
All right, guys, great. Thanks, Wendy. And
You're welcome.
again, and I guess, Wendy, can you go into a little bit more explanation of what the merit program includes?
Sure. Again, it trades just the cues. I saw a question flip by at one point asking what time frames. It actually goes from applying the 8 patterns that the book covers. It goes from daily charts down to 10-minute charts. And so it covers all the information to be able to apply the patterns to those various time frames, what to look for, when to enter, when to exit, and so on. But the special thing about the Q Merit program is the fact that I actually give you the trades. Again, this was what I'd mentioned earlier, that the last of the last 20, 19 were profitable, and these were trades that I issued. I send you an email that says get in now at this limit price and buy this expiration and so on. And this allows you to be able to be learning from me what I'm buying and suggesting to buy at the same time that you're working through this 200-page book. There are traders that just don't want to learn. They just want it done for them. And so you have the webinar, not webinar, the advisory that is giving the trades. They can even do auto trading where they get the email so they're aware that there's going to be a trade has been issued, but it goes also to the auto trade broker and they open up the trade and close a trade for you. It's a totally different kind of setup, just trading the one equity, and you can apply the patterns to different time frames. Now, we've been going through an unusual trading period that we are, I think, at a market top, and so I've been very cautious about issuing new trades in the last couple weeks. That we closed 3 that were profitable about a week ago, and we're going to see what's happening here in the next interim period. If anyone really wants to look at specifics, I think it's listed in the website there that you would go to, that's a special for today's attendees. But the website for the Qs is tradetheqs.com, and that has the performance record. It has other information about it, as well as what you're going to be able to read here in the flyer that you will be going through when you go to this link.